Excellent.
you.
Thank you so much. I'm loud and I talk fast, so hopefully, and I walk around, so hopefully I won't bore you. But very nice to meet you. Buenos dias. I'm Itai, and we're going to talk a lot here about the tokenization thesis, what works and what doesn't work. But if okay with you, I'm just going to crack on. Okay, and I'm going to talk about three things and three pieces, which is part of how investments work. And it doesn't matter whether it's on blockchain or off blockchain. And just remember these pieces. First is origination. Okay, we've had a big successful year in tokenizing T-bills through this process. First, origination. Origination is the ability to take an asset and to make a product out of it, to make a security out of it. And in the case of yield, it's the legal ability to tokenize a money market fund or a T-bill. We did that. Right? And then you need the infrastructure. This is the infrastructure layer required to move an asset, to custody an asset, to record it, to do the regulatory pieces that are required. Some of this is the blockchain itself, but not all of it. We have custodians, we have transfer agency, we have the other infrastructure pieces. And in the story of tokenized T-bills or tokenized money market funds, we have the last layer, which is distribution. And this is what we found in the last sort of year, which is that there's product market fit for crypto companies looking for yield. That's why we've seen this. We've seen a very big growth in tokenized money market fund and T-bill products over the last 18 months, right? But remember, demand from on-chain users has a limit. The product market fit of real-world asset tokenization so far has been for those that are already on-chain. And when you ask people, what's the scale of the possibility? You know, two of the biggest consulting companies in the world can't even agree within an order of magnitude of each other of how big the opportunity is, right? And the difference in how big the tokenization industry will become over the next few years will be dependent on the non-crypto users, or the people that we call, and we invented this term, RWAs, real-world investors, right? Who are they? Everything from family offices to wealth firms, private banks, high net worth individuals. No, I'm not talking about retail because the products that we focus on aren't retail products, but they come into this. These are the people who actually don't care about crypto. They don't care actually about the technology of how they get any asset or any investment. And that's who we focus on. Okay, so here's the good news about where we are in the RWAs for RWIs landscape. The first good news is that the infrastructure is ready. You know, all the builders over the last 7, 8 years have built, you know, infrastructure, and you can ask anybody. The reality is you can take any asset, you can take this building, you can take trade receivables, you can take a private credit fund, you can move it onto blockchain. And you can do that in almost every country, right? The second bit is that the regulation is actually fairly robust and ready. The assets themselves are already regulated. If it's a T-bill or a money market fund or a private credit asset, the act of moving it on blockchain is only slightly different. And in almost every country, they've established clear regulations about what that means. And the third piece is that there's big investment in the financial incumbent community. I spent 20 plus years on Wall Street. All of these folks have dozens of people, teams working on tokenization. They spent money, they invested in companies. These things have all come together. But then what's still missing? You know, remember this sort of three-step process. Origination. Is there a missing piece in origination? Absolutely not. You can take any asset, really, you can move it on a blockchain in a legal way. The second piece is infrastructure, you know, recording the asset, subscription, transfer agency. This is there too. Just like in T-bills and money market funds, it's ready. So what's the missing piece in this three-step process? It's distribution, right? How do clients find products they want using tools that they are comfortable with, right? And digital distribution is the missing piece, and that's what we do. So if you think about, we always use the analogy, you know, let's start with the ebooks, which I think is a good analogy. You have paper books. People say, oh, it would be much better to have a digital book. We could distribute better. We could get scale. So we invent this technology, a secure PDF. There's, let's say, 10, 15, 20 different ways of inventing a digital book. But until there's an Amazon Kindle where everybody can buy it, store it, use it, and they don't think about this technology, it won't scale. Same story with digital music, right? We can make MP3s. We can do all of these things, but until there's a distribution platform that brings everything together, that's compelling, that people enjoy, that they can use, they don't need to understand this process. I was a Napster kid. I was doing this in my dorm room with like all my friends' CDs. Most people don't care. They never care. My dad uses Spotify, right? And that's what we do in the realm of tokenization. Most people don't care and shouldn't care about this piece. It's the distribution layer that people care about. It's how they interact. So that's what we're building at TomNext. Okay, what do we actually do? And I'll give you a quick diagram, but then we'll save time for a demo. The first thing we do is we just ingest a ton of data about all sorts of assets, both on-chain and off-chain, and we help our clients find the assets they want. That's the first piece of digital distribution. That's the first piece of Spotify. I like punk music. How do I find something new? Show me the things I like. Show me the things that might suit me. So we use data and analytics to do that for our clients. Right. The second thing that we do is to get them to understand the asset. So how can you expect an investor to invest in something if they don't really know what the asset's about? So we leverage language models and modern technologies to automate the due diligence process. Right? And I'll show you that in the demo. But whether the asset's already on chain or whether they bring their own asset, in a matter of seconds, we can create a short investment memo and a report that gives them the key analytics that they're looking for. And we enable a sort of chat bot-like functionality that we're all getting comfortable with, given everything that's going on in the language models and AI space, to ask questions. What are the fees? Who are the managers? What is their track record? And then the last thing that we do is that we leverage tokenization and blockchain to make execution digital and seamless, which is the idea that we connect. We don't care. Clients shouldn't care which blockchain and assets tokenized on. They shouldn't care what the data infrastructure will be for actually executing. They just want to push a button and begin the execution process. Okay, so this is my like spicy why everybody's doing everything wrong slide. Okay, this is how tokenization works today, and this is why in some cases it's not working. Today, hey, a group of people gets together. Whoa, there are buildings in Buenos Aires. We should tokenize them. Somebody might want to buy them. Boy, that would be interesting. Let's tokenize this thing. And then they make a token, and then they're thinking, whoa, how do we actually find people who are going to invest in this token? Right? This is a super difficult process. Right? And it's totally different to what happens in traditional financial services. Because what happens in financial services is that you start with the client and the investor in mind. Right? The investor says, hey, we're keen to invest in real estate in Buenos Aires, and we want to invest in it in a digital way or in a new way. And then we want to have a feeder fund in Luxembourg, because we're based in Europe, to buy that investment, because from a regulatory and tax perspective, that's the way that we want to invest. And then the investment product is created that suits them. The wrapping of the asset, that's what we call it, is investor-led. The investor decides the wrapping of the asset. The current tokenization industry is wrapping the asset first and then hoping to find the investor. And that's part of why it's struggling. Okay, so just to give you a quick diagram of how we do this, right? First thing, as I said, we help clients source and evaluate the assets. Find me the assets, help me find assets. Clients bring assets, let me learn, right? And then the client says, hey, I would love to buy this in tokenized format because I'm getting the benefits. I might want to borrow. I might want it to just make it easy to subscribe. I don't want to wire money, right? Eventually, I want a pool of tokenized assets and I can, put them to a lender, right? And then we work with tokenization providers to start the tokenization process and deliver the asset to the client, right? Not the other way around. Okay, last piece is then I'll do a quick demo, right? So if we want to scale the tokenization industry to find real world investors, okay, these are the three things we think that clients need to have. First, a wide array of assets, right? Think of Spotify and imagine if you had 15 different Spotifys that you had to get to all the different music that you want to get to. It would never work. So we call this aggregation. You need to put this all in one place. Right? You can't have different digital distributions, each focusing on a very narrow sliver. In digital, that doesn't work. Right? Clients want one place. Right? The second thing is help me find, understand, and execute in the same place. Right? So that's the bit that we really believe is important. Help me find the assets, because otherwise, why are they coming to us? Right? And then help me understand whether or not this asset is even worth spending any more time on. Within a matter of seconds, you can get a report that says, look, you're looking for high volatility venture-like investment. This tokenized money market fund is not for you, right? Or, hey, this manager is very good. You should do more homework, right? That's what clients want. That's what family offices want. They want to save time. That's the whole point of digitizing. And then we do the things that we talked about, which is to indicate, hey, I would love this in a digital format. I don't want to sign paperwork anymore. I believe that digital is everything. Okay. I managed to get through that. We're going to do a demo in a second. Feel free. We haven't launched our app yet. Sign up for the beta. We'd love to get feedback. We love to engage with people who are either building, putting assets on chain, have ideas. You know, we're the kind of people who love to work with others. So let me do a quick demo in the 5 minutes I have left. We have to do this by video. I tried to do it live, but we'll do it by video. And I'll kind of talk through some of the features. All right. This is aggregation. Notice a universe of assets on a single platform. And they're across many, many networks. You know, some of these are on Avalanche. Some of these are on other blockchains. They're different tokenization providers. Well, this is going fast. Okay. These are the personalized reports. You click on an asset, you get information. You get the things that clients want. What are the returns? What are the risks? What's the liquidity going to look like? What are the fees? Right? And we say, okay, it's a report, but then clients want to ask more questions. Rather than call their advisor or send an email, we have language models that answer simple questions. How is this asset going to perform in a declining interest rate environment? You know, let me know. I think interest rates are going to go down. How is this going to perform? In a matter of seconds. And again, we're all going to get very comfortable with these GPT and language model-like interfaces. We think it's really important to enable now. So here you go. Very rapid answers to your questions, links to the source material, the deal collateral, the prospectus, the online sources, so that it doesn't hallucinate, so you get actual, true, good information to clients, and then they get comfortable. Notice here's the money market fund on chain, same story. Even though it's a money market fund, you get analysis, you get compatibility, you get the things that clients want to know so they understand whether an asset is suitable for them or not suitable for them. They will not invest in something unless they understand it. So we start with understanding. And then when they want to invest, simple click subscription buttons connecting to their wallet or key management infrastructure, all under the hood. So initiate the investment. Client wants to put 100K on Avalanche into Benji, click a button, invest, confirm them. Because all these things that as Web3 people and digital natives we understand is all possible, right? Without complex infrastructure, right? We do things like optimize your yield. Look, we suggest to clients, look across the universe of tokenized money market funds. Why don't you optimize your yield? Part of what digital does is reduce the friction of switching. So clients can switch between better yielding, lower yielding, and better yielding interest-bearing products. Again, add value out of the box so we can attract clients and get them comfortable with these means of execution and do more and more. Okay? Sorry, I'm trying to like time my comments with the demo. Right, and then there's this. This is tokenization on demand. This is the really cool bit, which is upload your own deal. Right? Upload the deal material that you've been sent in a confidential way. This is just for you as a client. It's privacy preserving. It's not shared with the internet, protects confidentiality. So you can upload the prospectus. You can upload other deal documentation. And we'll see what happens. So again, the system is uploading all the files, reviewing them. We put them through our domain-specific language models, and out will spit that same type of report that we saw earlier. So here's the asset, here are the details. This one happens to be for me. I had access to it. So again, I'm permitted to get an analysis. It's finalizing the memo. Again, it's a matter of seconds. These language models work very, very quickly. All of a sudden, here's your personal asset. It's in your own deal room. You can see it, you can evaluate it, you can get the same analytics that you could get from assets that are already on chain, and then you can indicate your desire to invest in a tokenized format. Remember, like changing the flow from being asset-led to investor-led in the process of wrapping the asset. Same processes, an instruction will get passed. If there's enough demand and scale and it's worth it because there's a cost to tokenization, we can initiate the process of tokenization and investing in tokenization on demand. So, I managed to get through that in 14 minutes, which I'm impressed with, and happy if anyone has questions.
There, we have a question then.
Hi. Yeah, so I'm from New York. I work for a hedge fund, so I'm very familiar with the audience of RIAs, family offices. And something we came across is when we had the option to tokenize, and we haven't tokenized yet, but actually when we presented it to our investors, they weren't that interested in tokenization. And I think this has to do with probably a lack of education and maybe them not being so open to change. So I'm wondering if you face like a similar objection, and additionally to that, I know you said that the app hasn't launched yet, but how many investors do you think you will be onboarding to your platform when you officially launch?
Great. Two questions. I'll do both. So first, the average wealth advisor in the world is in their late 50s or early 60s. And 95% of the wealth of high net worth people is managed by somebody else, not by the individual. So we have to remember that this whole industry has a reluctance to change, and that doesn't mean that in the next 3 months, all of a sudden, everyone's going to invest in tokenized format. We need to sell the benefit, not the tokenization. So things like, hey, you can borrow to invest in this private credit fund would make an RIA much more interested. Hey, you don't have to wire money and wait 2 months until the subscription documents come back. We can leave it in a money market fund that's yours. The yield is yours. So rather than someone else's escrow account, it's yours. Saves you 1% of return out of the box. We need to sell those benefits to educate. And again, we're realistic people. We come from traditional financial services. So our initial launch, we're going to focus on about 100, 200 clients. Because again, it's really about getting people comfortable. And the one thing I will say to you that links your two questions, in the space of wealth management, the best sales are people who are in wealth management who are using your product. So one thing billionaires love to do is tell their friends who are also billionaires what to use. So I think the real, word of mouth adoption, if we can provide these benefits to an early cohort of our clients, and we'll start to launch next year, hopefully the network effect around wealth, which is very tight, will help us a lot.
Thank you. Any other question? Maybe have time for one more? No, that's it. Okay. Thank you very much.
Okay, muchas gracias.